World stock markets trying to hold on to a recovery that was pinned on hopes for an EU bailout for debt-ridden Greece. But that, of course, remains in flux. Will intervention help ease the problems, or is it too large to contain at this point? In New York, Jon Levy with the Eurasia Group joins us. He thinks the situation in the Eurozone is still will remain extremely volatile. And on the phone from Hong Kong is Marc Faber. He believes that a correction in the global markets is already underway. Welcome, gentlemen. I'm going to start with you, if I could, John. There are also people out there who think that even if Greece does get some sort of rescue plan, that does not mean that contagion is off the table, that this is the tip of the iceberg and any rescue plan might actually complicate things for some of those other countries. Do you agree with that or not?
I think a rescue plan could be a complicating factor, but I think the fundamental issue is that in each and every Eurozone country, it's going to be an independent adjustment story. It's going to be a rocky and drawn-out process. And I think if we see support, it's going to be in the form of a loan, so it's still going to keep the onus on this sort of adjustment again, and that's going to be a very uneven process across the Eurozone.
Mark, do you agree with that? And if indeed the correction in the global markets is underway, how much more does it have to go?
Well, basically, most markets or stocks are down approximately 10 to 20% from the peak. Some markets, like the S&Ps, may be down only just 8%, and others are down like 20% from the peak. But we are in a correction phase, and I would expect this correction phase to run further. Now, very near term, on a 10-day basis, the markets are a bit oversold, so we could get kind of a relief rally. But I wouldn't think that in February we'll see a new high on the S&P and other markets on the S&P above 1,150. In fact, I think the 1,100 level on the S&P is now quite a resistance zone.
Mark, would you buy Greek debt right now?
Would I buy what?
Greek debt right now.
No, I'm not interested in government or sovereign debts, because I think that all governments will eventually default, including the U.S.
Wow. Whoa, whoa, whoa.
All governments. Mm-hmm.
All governments, except some, like Singapore, that have basically no government debt and have huge reserves.
Well, a lot of people...
In general, the problem is the emerging economies today are financially much sounder in terms of debt to GDP than the developed world, including the US, Western Europe, the UK, and so forth. So I think the problem will really be in the developed world, and let me explain why. In the developed world, we have huge debt to GDP in terms of government debt to GDP and unfunded liabilities that will come due. And these unfunded liabilities are so huge that eventually these governments will all have to print money before they default. That's the easiest way.
John, what's your reaction to that? I mean, we saw a big inflow into the U.S. dollar in a safety play. Obviously, the people that are going into that currency don't think that the United States is going to default.
Right. I think, if you look again at the sort of specifics of the question in Europe, and I think that is a good area to keep focus on, there's an awful lot of adjustment that needs to take place here. Yes, I think that as this process unfolds, we're going to see pretty fundamental shifts in social models, in this sort of fiscal structure, and the sustainability issue is going to remain paramount. But I don't think that it makes sense to sort of jump to a conclusion that this is a sort of perpetually unwinnable or a situation that can't be subject to adjustment. I just think that it's going to be a process that's going to be drawn out, and I think that we need to sort of keep that focus and sort of keep attention to where those variables are and what that adjustment is going to look like, and also keep in mind the sort of relative differential within those processes.
Okay, Mark, about your catastrophic outlook, you're the boom, gloom, and doom report, so 2 out of 3 are really negative. I just want to know, Mark, were you selling this kind of panic in March before stocks rose 60%, and did you miss out on that upsurge?
Actually, I have very good news for you, because on March 6th I was interviewed by Bloomberg, sorry to say that, and I said to buy stocks. And since then, the gloom, boom, and doom report has been very positive about stocks. But
that's really good to hear.
I'd also
Thanks very much.
To stress, because I'm so negative about government bonds, and because I think that monetization will continue, I'm relatively optimistic about stocks going up. They'll probably go up less than precious metals, but that's one of the safe havens.
John and Mark, we gotta carry this on at another time. Thanks very much.